Hello, this is the Chart Profit video. This is about an hour pre-open on Friday 9th of September. Looking here at the pre-open, looking at the E-mini S&P. On Tuesday here I marked aggressive buying for the first time in 2 months. And during that trading session, as suspected previously, the 4-month point of control migrated higher to 2180.50. That's here. And I said pre-open on Wednesday that price relative to this level should be monitored as a guide to short-term strength, and time below this level would put the short-term strength implied by this buying imbalance in doubt. Following day Thursday, we saw a test of that green at top high, which is 80% reliable. The value area for that day was generated above that level, but then on Thursday we saw a narrow value area centered around, almost around that level. And I've reiterated again that price relative to that level is a good guide to short-term strength. Effective buying or selling above or below that level could mark the next start of the next directional move. In the market, low volatility leads to, or tends to lead to, breakout and high volatility. If we look here at daily chart of the spider, and I've overlaid on this upper and lower Bollinger Bands. I use a 40 period here, but you can see that the width between the upper Bollinger Band and the lower Bollinger Band is narrow relative to previous history. In fact, that's the tightest we've seen this squeeze for many years. This will often lead to some violent price action. So we shouldn't become complacent across this range and think that this low volatility could continue. We're probably going to see a violent breakout one way or the other from here. And that's why this level, 2180.50, needs to be monitored really carefully. If we look overnight, looking here at an hourly chart of the September E-mini, here's the level we're monitoring, 2180.50. Saw some time printed below that level here. We're actually quite a bit lower now, down around 2167. That was the previous point of control before it migrated higher last week. Sorry, this week. Did that in the period across here. So this level 2167, a fairly high volume. By that I mean it's attracted a lot of time, and time spent here could actually migrate that point of control back down. Currently though, price below 21.850 gives me some cause for concern. I've also just calculated that the spider S&P ETF, the 3-month point of control on this chart, has migrated higher to 218.37, and no doubt we're going to open below that today. Just to remind you, this being recorded pre-open, so we're only seeing charts here through close Thursday. This is the Russell 2000 ETF, IWM. It's been relatively outperforming this week and probably last week, so in the short term this is a leader. I don't have any close level for this chart to monitor. The closest is the 3-month, which remains at 119.57, so this isn't a key chart right now. The spider and the E-mini certainly are. Qs, this one is a key chart. The 4-month is at 116.97 and has remained there, and no doubt today will open close to that or possibly below it. Just looking at price relative to these important levels, just to give us an idea of current strength, weakness in the short term. This is the UK FTSE 100 index, closest level we have here, which provided really obvious support last week, is 67.23. That's the 4-month point of control. I showed this chart last week. This is the German DAX. There is support at the halfway point of the major high last year, just above 10,540. That's support. And we've been having some problems on this chart with the value area high. So if we look back over the last 3 years, I showed this last week, this level representing the high of that major value area over the last 3 years. I mentioned the possibility of the associated point of control down here with some time up here possibly moving higher, which would lift this and then lift the value area higher. That hasn't happened yet, so this is still a kind of resistance for this chart. And as we can see, it has been again this week. Price underneath this halfway point, put it in a weak price location. This is TLT, the T-bond ETF. In the pre-open, we've been looking and monitoring this level here, which is the minor halfway point of this year's high. And you can see the resistance that we've had there recently. I said the price back above there would put it in a strong price location. That obviously hasn't happened. And after trying 3 times at that level, TLT saw a bit of a sell-off yesterday. So I'd certainly want to see price back up here. So now with the price being below 139 or closing below there yesterday, which is the 4-month, we're in a weak price location here on the T-bonds. And if we look here at the September futures, this is today's bar, and we're currently printing quite a bit lower again today. So there's a bit of a sell-off going on in the bonds here. Again, I showed this chart last week. This is GLD, the gold ETF, similar to that DAX chart with the 3-year value area high in here, having been probed a couple of times. We're looking again at the possibility of this associated point of control moving higher, and again that hasn't happened yet. Gold has come higher this week. We'll need to monitor that point of control. Will it migrate higher? But price relative to this halfway point, if you look at the pre-open, each day I'll tell you where price is relative to that level, just in terms of short-term strength or weakness. This is USO, the oil fund ETF, from the major low back in February to the subsequent high. Here's the halfway point. We saw recovery at this point, and then what looks like now a possibility of a higher low on that halfway point, with price yesterday recovering back above the major point of control at 1078. So oil seems to be trying to maneuver into a stronger price location. So price above 1078 is strong for the USO, especially after that clear retracement support just above the level 10 here. This is the dollar index. Last week, as we said at the time, we've seen clear resistance at that halfway point from the high over here. That's the obvious resistance on the chart. The obvious support is the 2-year point of control at 94.76. That's where that controlling price remains now, and we've seen a little probe into that, but currently it's holding. This halfway point just above 96.20 here, we see price back above, doing this sort of thing that will put it in a strong price location. Price below the 2-year, 94.76 down here, will put it in a weak price location. In the middle here, dollar index isn't giving us much clue about the real strength or weakness of the chart. The big support on the pound-dollar chart is at 131.37, which is the minor point of control from the Brexit sell-off. From that point there, I've been looking at a 5-minute chart and calculating the point of control, and that's at 131.37, and that is almost exactly, in fact it is exactly the halfway point from this low to this high, the current range. So we're getting a bit of a bell curve still here. So that should be strong support, a little bit of weakness as the dollars come back a bit. If for whatever reason we see the chart back below that level and the point of control remains there, we're back in a weak price location. But currently, longer term, it's looking a bit stronger. And I'll continue to monitor closely that 5-minute point of control. Euro FX chart, the euro as well against the dollar in a stronger price location. The 4-year, it's actually migrated a little higher to 111.65. That happened as we probed it here just a few days ago, so that is the first level support on this chart, with the halfway point support off last year's low just a little lower here. So again, similar to the pound, we're in relatively strong price locations currently for these charts. Looking here at the daily breadth chart for New York through Thursday, these being breadth indicators at the bottom here. The bottom two, the percentage stocks greater than their 50-day moving average, holding above 50 here, net new highs 25, 5-day moving average indicator holding above 0, that giving us a green bar here on the central breadth indicator on the pulse chart. Our price momentum indicator, the price oscillator at the bottom here, has dipped into negative territory, which, if I'm being strict about it, indicates that the price trend on the daily chart has turned down. So we'd hope to see that recover and breadth stay green. Getting a little mixed here though. If we saw effective selling being marked, that would be red on the E-mini, and we saw the breadth start to break down, this would look like a much weaker chart. My version of the RightX indicator was ratio was slightly higher at 7.2 here. On the 26th of August here we hit a 7-month high at 7.9. As I mentioned before, it's not an extreme level. We've been all the way up here, but it's just exceeding a previous peak. You can see that kind of thing over here. Can indicate a little over-optimism on the point of the RightX traders. Looking here at the bull fund assets in isolation, they also hit a 7-month high at this point here. And unfortunately, bear fund assets remain extremely low here. Nothing too exciting to report from the public poll from AAII. Bulls percent was higher at 29.7, bears percent was lower at 28.5. The 4-week moving average of that net, bulls minus bears, that's the black line, pretty close to 0 right now. We did hit a multi-month high at this point. And as we know, in the Investors Intelligence poll 2 weeks ago, the bulls percent reached 56.7, which was the highest since May last year. And 3 weeks ago, the bears percent hit a 12-month low. And if we look at the black line, the 4-week moving average of the net, the bulls minus the bears, that's 34.42 this week, slightly lower than the previous week's 35.35, which was the highest since May last year. So there have been some bulls emerging recently, some enthusiasm coming back into the market. If there's a correction coming, we will look for the initial indications in the E-mini, looking for effective selling, and then obvious breakdown in breadth. Just finally, we're looking here at the S&P commitments of traders from last week. If we look at the commercials, the smart money net position, this dotted line here representing the low in the net position over the last 3 months. We're currently here just a little above that. I'm just wondering if we'll see that level broken. And if we look at the bottom, the red line, which is the small traders, they're not so smart money, this line, dotted line, representing their highest net position, and again that could be exceeded. Those two events together usually do not represent any kind of bullish signal for the market and tend to be more of a headwind. You can see these dotted lines here, just the previous times this has happened. We'll wait and see. It'll be in the ebook this Monday. That concludes. I'll get this posted for you so you receive it pre-open. Let me also wish you a good weekend and thank you for watching.